Okay, today is March 9, 2014. Hope everybody had a nice weekend and getting ready to get back to trading tomorrow. I thought I'd do a little video on Apple. Since Apple, it's kind of giving a lot of people a lot of fit, I would say. Because right now, Apple, you could make a case for either direction, going up or going down. And let me explain why. And also in this video, it's also give me an opportunity to show how I use the Fibonacci retracement tool. First of all, looking at Apple, I got a little trend line here. You can see that the price came down and found support essentially somewhere around this level here and sort of bounces off. So it kind of give me a little pivot point for me to connect this line. Of course, there are people that could say we have a little bit of a trend line here. That's valid. You could do that if you want. But right now, I'm basically looking at a little bit of a longer, bigger trend. And in addition, I also have a support level here, which a lot of people was looking at Apple to pull back and fill this gap here. Right? And then there were also people was thinking about, buying or going long after this gap is filled and when it get a bounce. Well, it did come down. Unfortunately, it did not come all the way down to fill this gap. And for the long, you could say that is fortunate. And it got a bounce up here, okay, finally near this 515 level. Then when it come back up, notice that there is this pivot point that I also mentioned a few times, near this 529 level. When it come down, it really did not provide much of a support. It's kind of slight too, except just one day kind of bounces out, and then this big red candle or big black candle, this down candle just slides right through it. And then all of a sudden it just become a resistant because you can see that it's trying to get above it, tested against that a few times before it dipped down and try to fill this gap and found support down here. Then it bounces back up, and again, it also kind of tests this level here, this 529, a few times before it broke through. And even that, last Friday on an OpX, it actually went back down on an intraday basis, but it closed back up above it. Okay? So you can see that there are a lot of conflicting information here that you can make a case of one way or the other. Then also looking at the moving average here, here's the 50-day simple moving average. It's kind of declining and it's rolling over. And here's the 20-day exponential moving average, kind of, whipping around and seems like that it's trying to turn up. So if we look at this on a moving average basis, you also got, getting conflicting signal. So now if I'm going to use the Fibonacci retracement tool, and essentially I'm going to start with the long side, making a case for the long first, and then we're going to make a case for the short. So I'm going to use this swing here, and I'm going to have this set up to do the Fibonacci retracement. And let me zoom this up so we get a better view of this. Okay. So you can see that here's this pivot point here we're talking about, and here's this support level that we found down here. And if you note that here's the 38.2. Now, depending on how you look at the Fibonacci retracement tool, because it all centered around this 50% point, it could be up or down. You could call this 61.8, and this is 38.2. It all depends on your reference. Okay, so you could say that it came, retraced from this level up here. If this is 0 and this is 100, it retraced 61.8% of this swing. Then you call this 618. Now, if we say it retraced back to the 38.2% level, so in other words, you are talking about the distance between, the percentage between this 0% to here. This is 38.2% level. So if you say you're retracing back to, then you say it's 38.2. But if you are talking about retracing the amount, then the amount is 61.8% of the swing. But regardless, that's why we call this the retracement zone, the 618 and 282, centered around that 50% point. Okay, so the number is all depend how you reference it. All right, so let's get back and looking at this. you see it came up 100% and it retraced back to the 38.2 level. Then we found support, and now we bounced back up to the 618 level. Okay? And you see that there is some resistance here a couple of times before it broke through. Now, this right here, this doji hammer is, kind of slightly bullish if you want to interpret that. When it is at this level of the game, the price movement. If we were up here, then you talk about that like a hangman doji. Right? Then that could be a little bit of a bearish type of hammer, like over here. Okay, so it's all depend at what stage of that price movement these candles appear. So you have to learn about, interpreting candles. But in this case, just go with me for now. Right? This is a little bit of a bullish candle. And essentially, if we see price move up and maybe possibly break this level, then we could say, hey, maybe it's making a move to this particular level here, the next resistance, which is this trend line. And if it breaks that trend line, because then it could get back up to this pivot high here, somewhere around this 552, then it could move up and get back up above this 127 and the 141. Essentially, we are getting to that level of that 572. Right? Okay. So because the Fib is not exact, so you get these rounding error numbers. Right? So we get up here. This is 574, somewhere around 575. So that's pretty close. Okay. So that's the bullish case. Right? Again, understand when we try to use, when I try to use the Fibonacci retracement tool, I don't trade off of it. Okay, I trade with it. In other words, there's a very distinct difference of trading off of any kind of indicator or trading with the indicator. When we trade with something, it's basically looking for some sort of confirmation or some assistance from it. Versus if we are trading off of it, that basically we're taking that as a signal to do something. Right? So believe me, there is no one indicator in this world will give you a infallible trading system. And if you are trading off an indicator, in the long run, you will find out that they are not that good. Because most of the professional traders, they use the indicator for confirmation or for some sort of alert. And most of them, if not all, but most of them, trade based on price action. It's all about the price movement. Okay, so that's why you have to look at these in context. Right? We look at this 38.2 right near this support level here, and we see it bounces off this 38.2, essentially bouncing off this support. That's a positive, right? Okay. Then when it come up here and encounter resistance at this 618, and it kind of retreated a little bit, but it held the 50% level here. It's kind of, and then it finally broke through that 618. So now we broke that resistance, now becomes support. Okay, so now we broke through this, what we call the retracement zone. Then now we're essentially looking for the possibility of initiating some sort of a long. Okay, so that's the long side. Now let's flip it, and we're going to take a look at the short side. Okay, let me take this Fibonacci retracement tool, and now I'm going to look at this swing here. All right. So let me put in this Fibonacci tool here. And essentially, I am looking at this particular swing from this peak to this support level. Essentially, I said, hey, it came down and it came back up. And now I'm betting it's going to go down. Now, why am I betting it's going to go down? Well, you look at this. It came up to this 50% point. This 50% point sort of kind of give Apple a little bit of a resistance here, and it kind of bounced back. And right now it's hovering this 618. Okay? So if it breaks through the 618, then we're essentially looking for it to come down here. Essentially this H pattern that we're looking at. Right? So that's what we're looking at on the bearish side, is for this price to break below the 618, say close below the 618 and move down, then essentially we're looking for this thing to come down and possibly break this level here and get down here and completely fill this gap this time around and break this trend line, and maybe that will take it down to this 493 level. Right? Look at where that 493 is, right? 168. A lot of people are looking at this level, right? But the thing is, don't trade just based on the Fib level, but look at it in context. You see the support, the price action, the support, and the resistance. Okay, right? And that's how we, kind of use these tools to assist us to make the decision. Now, right now, you say, well, which way should I trade? Well, you could trade either way. Trading is actually risk management. And this is one case that you could trade either side. And I tell you what, no matter which side you take, if you manage it properly, both sides have the same opportunity to be profitable. It's all depends how you manage your risk. Okay? So this is how we look at it and use technical analysis and use and that's one way I use the Fibonacci retracement tool. Now, as a disclosure, I do have a long position on Apple, but do I have a bias one way or the other? No. If it comes down and, if it comes down and play out this bearish case, I'm out. Take my losses and wait for another trade. Okay. If it moves the way that I think it will move, then I just play it accordingly and move the stop up and manage the risk until the trade says stop. Now, I don't go and say, oh, as soon as it hit this 127, then I'm going to get out. That's my price target. No, because it might never get up there. If it doesn't get up there and it shows me some reversal price action, I'm out. But if it get up there and just went right through it, hey, I'm not going to cut myself short. If I'm on a winning trade and I got this big runner, I am going to let it run, right? So why should I limit myself on the upside and just, not even give it consideration to maximize the potential if I get lucky on one of these big trades? It's all a probability game, right? So good luck.